Hey guys, it's time for another Precious Metals Update with Andy Schectman, the president of one of the premier precious metals dealers in the United States, Miles Frankiln. Andy, good to have you.
Thanks, Sean. I always enjoy being a part of your show.
We value your input and perspective on these issues. Andy, once again, we're seeing tremendous volatility in the metals, particularly in gold. I want to talk about two schools of thought, the sane and the insane. Now, in the latest Miles Frankiln newsletter, your father, David, shares his thoughts on an article written by Nick Guarino of Wall Street Insider, and I think people are really going to enjoy this. Nick's thesis is that gold is the biggest bubble of all, that there is no inflation, and that you should sell all your gold and silver and invest in U.S. dollar-based treasuries in euro bonds, and he predicts gold will fall back to $200 an ounce. Now, your father, David, writes, quote, "This is wonderful advice if you want to end up in the poorhouse." Now, the reason I bring that up, Andy, is because I want to contrast that against the NIA, the National Inflation Association, in which they have an article out called The Largest Bubble in U.S. History. And they note, Andy, in this article, any investor buying 10-year treasuries with a yield of only 2.2% needs to have their head examined. So the real bubble's in bonds, isn't it?
Yeah, absolutely. In fact, you know, people focus on the gold manipulation that we've seen over the past 10 years, and I would argue that everything that has been done with gold is in an effect to manipulate interest rates. And, you know, whether you talk about gold being manipulated and shorted and the proceeds going into treasuries to buoy interest rates and levy the dollar, whether you talk about the issues with the FDIC, you know, if you're worth big money and you're concerned about where to put your money these days, and FDIC only insures $250,000, you know, you're sitting on $10 million. Where do you put your money? The big money, it's been engineered, and the big money has gravitated towards bonds. And the bogus numbers coming out of the Bureau of Labor Statistics, you know, citing inflation at 3.5%, are grossly understated. We would say they're closer to 8 or 9%. Ask John Williams, he'd probably say 10%. But the bottom line is that with inflation on the horizon, with the monetary base exploding, with M2 exploding, it's hard to believe that we won't see inflation really show itself in the next year or two. You know, I think the most important thing to do is emulate the Chinese model. And the Chinese model is through your work and through your labor, you accumulate dollars. But if you save in dollars, you'll go broke. Instead, the Chinese are using all of their excess dollars to buy assets. They buy all the gold and silver and the gold and silver mines and oil in the oil fields. They buy 4 times the copper they need for their annual production because it's money to them. And I think the bottom line is that when people realize that this isn't a liquidity crisis as much as it is a currency crisis, interest rates have nowhere to go but higher. And when that happens, what I consider to be the mother of all bubbles, the bond market, has nowhere to go but down. And so selling your gold right now and moving into treasuries is about as dangerous of a move as you could get.
Yeah, it's insane. As your father notes in his commentary in the newsletter, it's literally insane. And to back you up, on your inflation statistics, the Bureau of Labor Statistics, the BLS, their own data for year-over-year price inflation in the U.S. is already 3.63%. So anybody that would buy a 10-year Treasury yielding 2.2% is literally insane because you're
going backwards.
Yeah, you're absolutely going backwards, and that's of course the U.S. The government statistics. The real price inflation rate is much closer to 8 or 10%, possibly higher if you go with John Williams' shadow stats, as you noted. You know, for any clear-thinking person who's looking at governments around the world and their behavior as it relates to their own currencies, we're not seeing any behavior that is going to account for gold going back down or silver going back down in value. They're only going to go up as these nations debase their own currencies. Whether we're talking about the Japanese with the yen or we're talking about our own government with the dollar, the euro's got its own share of issues. The only place you can go to seek shelter from this monetary chaos is gold and silver.
Yeah, that's right. And you're starting to see for the first time central banks accumulate gold. And it was just a few years ago that they were net sellers. In fact, for the last 23 years, they've been net sellers, becoming net buyers just in the last year. You have South Korea, who just disclosed, I think they bought 25 tons last week. You have Mexico and Russia and Thailand, who have been major buyers this year. In fact, year to date, I believe governments have almost tripled their net gold purchases since 2010. You have Saudi Arabia, who doubled their gold reserves this year. And, of course, although it's not acknowledged by the mainstream, there are many people who believe that Iran is, over the last decade, covertly has been one of the largest buyers of gold bullion. And then, of course, you throw in China, Russia, and India, and you have the big money, the smart money, the people who aren't affected by the bogus statistics coming out of the Bureau of Labor Statistics, who are buying gold and silver, and that is what is propelling the market higher. It is not a bubble. It is not a bubble being induced by investor sentiment. It's smart money exiting the currency arena, dollar and euro-based arena, and moving into 5,000-year-old money. If you focus on what is coming out of the mainstream, if you save in dollars, you will go broke. I mean, it's hard to argue other than that as far as I'm concerned. The dollar's days are on their way out, whether it be through further currency debasement or whether it be through what has started as a trickle out of the dollar and what eventually will turn into a stampede out of the dollar and into tangibles. The handwriting is on the wall, Sean, and we believe very strongly that gold and silver will propel much higher here by the end of the year. And then you throw into the mix what I consider to be the biggest issue of all, and that is lack of available supply. And I've said this to you before, we're seeing very little in the way of secondary market material, virtually none. And so I think to some degree, part of the population in this country is wising up to what is coming out of the mainstream as being disingenuous and bogus. And I think over the next year to two, it'll become increasingly clear that you have to mitigate your dollar position. People say to me, how much gold and silver should I own in this environment? And I think the proper question to ask instead is, how much dollar exposure do you want?
Hey guys, thanks so much for watching part 1. Don't miss part 2. Click here.